Good morning, and wishing you a great Thursday ahead. Welcome to today's episode of Morning Wealth. This will be my second last episode. We're talking about three things today. Stocks up, yields up, earnings from Chipotle and Coca-Cola, more earnings from Johnson & Johnson and SAP. US stocks rose Wednesday, extending the previous session's rebound as investors turned their focus to the banner start to corporate earnings season. The S&P 500 was up 0.8%, the Dow was up 0.8% as well, and the Nasdaq was up by about 0.9%. A strong start to earnings season has helped buoy sentiment after Monday's steep sell-off, sparked by concerns over rising coronavirus cases. The yield on the 10-year Treasury notes also rose to about 1.27 from 1.20, its largest one-day jump since 16th of June. Yields move in opposite direction to bond prices and have skidded in recent weeks in a sign of waning concerns about a prolonged overshoot in inflation. Yields on government bonds are likely to rise back to those March highs is what the senior market economist at Capital Economist said, but it will probably prompt investors to shift money back into stocks that benefit from the reopening of the economy, is what he remarked. Fears about the global economy still move the market. The ICE US dollar index, which measures the greenback against the currencies of major trading partners, rose above 93 on Wednesday morning, near its year high. This is according to FactSet. US crude oil rose about 4.6% to 70.30, its biggest one-day percentage gain since April. In other markets, Euro 600 jumped 1.6%, buoyed by shares of travel, leisure and retail companies. Japan's Nikkei rose about 0.6%. Shanghai Composite also added about 0.7%. On to earnings. Chipotle Mexican Grill was up about 12%. Shares hit a record high Wednesday as the burrito chain expressed confidence about growth, saying customers are returning to its dining rooms to eat out despite higher menu prices. Sales of the company's quarter ended in June outpaced the same period before the pandemic, with more people eating out again, particularly at lunch, is what the company said. It was pretty amazing to see how quickly the consumer showed up, is what the CEO of Chipotle remarked. Chipotle shares was up about 12% on Wednesday early in the session. The stock marked a record high of 1778.29. Chipotle shares, which have been trading for more than 15 years, are up about 50% over the past year. Investors are closely watching whether consumers are returning to restaurants amid inflationary pressures that have made going out to eat more costly and possible hesitancy related to the highly contagious Delta variant. Chipotle raised its menu prices by about 4% earlier this year, but the chain said it hasn't seen pushback from customers from price increases. That price increase helped cover higher wages for workers, is what the company said. The burrito chain was considered by some analysts to be a pandemic winner, given its investments in delivery and online ordering before the virus surge. Online orders now account for nearly half of the company's sales. However, the chain also reopened all of its dining rooms. Chipotle said it's planning to build at least 200 new restaurants this year and reiterated a long-term goal of 6,000 locations across North America. Moving on to Coca-Cola. Coca-Cola raised its outlook for the year as rising COVID-19 vaccination rates and the reopening of restaurants, stadiums and movie theaters boost sales of soft drinks around the globe. The beverage giant's sales plummeted in 2020 when the COVID-19 pandemic closed dining and entertainment venues. The company's revenue in the most recent quarter soared above levels from a year earlier and topped revenue in the same period in 2019. Coke Chief Financial Officer John Murphy said the results show that consumers are starting to return to pre-pandemic consumption patterns. There was a lot of conversation a year ago on whether social behavior was going to be permanently impacted by the pandemic, is what Mr. Murphy said. What we are seeing is that is actually not the case. People want to get out and about. Coke sales volumes for the quarter ended June 2nd grew ahead of the 2019 levels in markets such as China and Brazil, but trailed in India, which was battered by the pandemic this spring. Overall volume was down slightly from 2019 levels. The company's net revenue for the quarter stood at 10.1 billion, a sharp rise from a year ago and up slightly from 10 billion in the same period in 2019. Coke now expects organic revenue growth of about 12 to 14% in 2021, up from a prior view of growing at a high single-digit rate. It projects earnings per share will grow between 13 to 15% this year, up from a prior forecasted growth rate of between high single digits and low double digits. On to Johnson & Johnson. Greater demand for medical devices, drugs and consumer health products helped boost sales and profit for Johnson & Johnson the latest quarter, a sign people are returning for healthcare services they deferred earlier in the pandemic. Sales of J&J medical devices climbed 63% year over year is what the company said Wednesday. Higher sales of the company's skincare and beauty products helped lift J&J's consumer health revenue by about 13% compared with the year earlier. J&J is a bellwether for the healthcare industry because its products span several categories, logged sales of about 23.31 billion, a 27% increase year over year, and adjusted earning of about 2.48 a share. Wall Street had forecasted an adjusted earning of about 2.29 and revenue of about 22.49 billion. Our outlook for the rest of the year really remains strong for our sector, regardless of what happens with emerging variants and any continued blips as it relates to COVID, said Jennifer Torbett, who runs J&J's pharmaceutical business. Ashley McCoy, J&J's medical devices chief, said hospitals appear better than earlier in the pandemic at handling any surges in COVID-19 cases while keeping elective surgeries going. Yet, she said some hospitals in the US are beginning to delay elective procedures as COVID-19 cases mount. The company raised its guidance for full year performance. J&J forecasted sales of about 93.8 billion to 94.6 billion and adjusted earnings of about 9.6 to 9.7 a share, up from the maximums from the previous forecast of about 91.6 billion and 9.57 a share. J&J said sales of COVID-19 vaccine, which generated about 164 million in revenue in the second quarter, could pick up during the later parts of the year. The shots could notch about 2.5 billion in revenue for the year, most of it in the fourth quarter, is what the Chief Financial Officer Joseph Walk said. Lastly, I just wanted to quickly touch upon SAP's earnings as well. German enterprise software giant SAP is showing signs of acceleration in its push to shift its business to the cloud. SAP posted solid but complex results for the June quarter. Still, shares fell about 4.5%. Revenue was at about 6.67 billion euro, up 1% from a year ago quarter, or 3% higher adjusted for currency, and in line with Wall Street's analyst projected forecast of about 6.69 billion. SAP posted cloud revenue of about 2.27 billion euro, up about 11% or 17% in constant currency. SAP is in the process of shifting a substantial portion of its business to cloud versions of its flagship enterprise resource planning software and other related business applications. That has the effect of smoothing out revenue over the long run, but reducing reported revenue in the near term. Revenue applications run on premises are generally recognized upfront, while cloud application revenue is recognized over time. That is the update. Stay safe and healthy, and I'll speak to you tomorrow. Thank you.